Good morning, Trinidad and Tobago, and welcome once again to the Bourse Report. The first week of the year has been completed, and what has been some of the challenges coming out of that first week? Well, it has been a very difficult week for the markets, and today what we are going to speak about, one, what has happened in the first week very briefly. Secondly, what are our themes, our investment themes for the year 2016. These are the Bourse themes. And what can we expect in the application of these themes to the various areas, whether they be local equities, local bonds, international equities, international bonds. Let's turn now to our first graph and speak to the question of what has been happening to the market. Well, when you look at the stats there, what you see is basically all red. The market was quite tumultuous in the first week of this year internationally. China was down 10% from the beginning of the year. Latin America down 7%. The US down 5%. Europe down 5%. India down 4.5%. And the Trinidad and Tobago market was down just about 0.1%. It's a tumultuous start to the year. The market has been roiled. When you see the currency situation, when you look at the softening in the China economy, commodities have been down, and in particular, our focus is on oil and gas. Oil is down sub $33, as well as natural gas down in the 230, 240 region per MMBTU. So it is an increasingly challenging situation for us as investors looking out there. What do we do? Let us turn to our second graph when I show you the themes for Bourse, which is really a continuation of what we have been saying in 2013 and 2015. And that is, what we need to do is to target inflation-adjusted investments. By that we mean invest in areas where your return is beating inflation, or else the value of your assets will be in the negative. Diversify across currencies, important at a time and becoming more important at a time where there are significant pressures on the Trinidad and Tobago dollar. So your wealth measured in US dollar terms, if this pressure continues, will decline, all other things being equal. Diversify across asset classes. This has been our mantra, that if you want to get a portfolio that is somewhat balanced and diversified, you need to move out just of bank deposits in some cases, into mutual funds for those who have smaller balances to invest, and across the spectrum of international equities and international bonds. Lengthen your investment horizon. This is the only way that you can participate fulsomely in the benefits and the gains from bonds as well as equities. You need to go out longer. So let's talk about, thirdly, what would be the kind of portfolio and what would be the areas that you need to invest in this kind of situation. Well, we will look at our third graph and get some pointers from that particular focus. What are the major asset classes? And you will see from that table we are looking at bonds and equity, local and international. Let's talk about local equity, which is at the bottom left-hand side of your screen. And when you talk about local equity, our projections are that the market as a whole will come down maybe 3 to 5% in terms of valuation, given the economic situation, given corporate earnings expectations, and what that will do in terms of price to earnings multiples and so on. So you have to be very, very selective, not buy the entire market, but be very selective in terms of the stock that you are going to pick. We can help you with regard to stock picks, and we have given indications of what we feel already are some of the areas that you might want to participate on if you go for a very selective investment. What about local bonds? When you go back to the graph, inflation adjusted. Well, your bonds, even at the 10 years mix, if you go back to that graph, your bonds, even at the 10-year mix, the top left-hand corner, you would see that on an inflation-adjusted basis, 10-year bonds in Trinidad and Tobago are just about giving you flat and negative territory. Does not make sense in a situation where interest rates are expected to continue to rise. Thirdly, when we look at the international, the medium-term areas, there is a bright spot in the international bonds. US dollar denominated bonds, investment grade, emerging market, that 5 to 7 year space is giving you plus 5%. And if you hold to maturity, you have some stability in a rather tumultuous world with very significant volatility. An area to watch for those who have some opportunity to invest in US dollars. International equity, I just showed you that the market has been extremely roiled in the first week. It is not the time for you to pursue that where volatility is continuing. That will be for the most aggressive investor rather than the moderate investor or the conservative investor. Just these are some tips. There might be a good entry point as you come forward, and we'll wait to look for that entry point into international equities, and we will be advising our customers and clients accordingly. These are some of the thoughts for as we go forward into 2016. Have yourself a wonderful investment week. Look for our mutual funds under the Save, Invest and Bourse rubric, where we show you what the valuations are. This is on the page 10 of one of the newspapers. Look for our detailed reports in one of those newspapers as well, and go to our website at bourseinvestment.com/content, where you can see a repeat of this particular CNC3 report and more details of the report. Have yourself a wonderful investment week. This is Subhash Ramkalawan for the Bourse Report.